The bank's dirty secret: how to protect yourself from credit card fraud. The truth about debit cards. Every time you swipe your debit card, you're putting your money at risk, and the banks love it. Many people think debit cards are safe because they're linked directly to their bank accounts, but the truth is, they offer minimal protection. If your debit card is stolen or cloned, criminals can drain your entire checking account. Worse, you're at the mercy of your bank's investigation to get your money back. While you must report the theft quickly, your bank may deny your claim or only refund part of the money, leaving you vulnerable. This is how banks capitalize on your vulnerability. Footnote: debit cards offer limited protection compared to credit cards, leaving your funds exposed in the case of fraud. Why credit cards are safer. Credit cards offer more robust protections than debit cards, thanks to the Fair Credit Billing Act. If you dispute a charge on a credit card, you're not held responsible for the disputed amount during the investigation. Additionally, if fraud occurs, your maximum liability is capped at $50, and most credit card companies waive that entirely. This is a stark contrast to debit cards, where stolen funds are already gone and may take weeks to recover. Footnote: credit cards are legally protected under the Fair Credit Billing Act, offering more safeguards than debit cards. The secret credit card dispute trap. The Fair Credit Billing Act provides substantial protection for credit card holders, but here's a catch: when you dispute a charge through the phone or app, you waive your rights to this protection. To trigger the legal rights under the Fair Credit Billing Act, you must send a written dispute to the address listed on your billing statement within 60 days. If you don't follow this procedure, you forfeit your protections, leaving the banks in control. The reason behind this is that, by mailing a letter, you ensure the dispute is handled according to the law, and if the bank fails to comply, you can sue them for up to $5,000 per violation. Footnote: disputing charges over the phone or app can waive your legal protections, so it's essential to follow the proper procedure. The Fair Credit Billing Act: how it protects you. The Fair Credit Billing Act is a powerful tool that safeguards consumers. It requires banks to acknowledge your dispute in writing within 30 days and prohibits them from charging interest or reporting the disputed amount as late during the investigation. If the bank fails to provide proof of the disputed charge, you can sue them for up to $5,000 per violation. Furthermore, the law requires that the bank provide evidence of their conclusion. Without proper proof, they are legally obligated to refund your money. This provides a crucial layer of protection for cardholders. Footnote: the Fair Credit Billing Act ensures that banks follow strict procedures when handling disputes and provides a powerful tool for consumers to protect their rights. How to use the Fair Credit Billing Act effectively. To effectively dispute a charge and trigger the protections under the Fair Credit Billing Act, you must send a written letter within 60 days of receiving the statement with the error. Keep a copy of the letter and send it via certified mail to ensure it's properly received. If you do not receive a response within the required time frame, you can challenge it within 10 days. If the charge was authorized by someone you know, then you're liable. By adhering to these rules, you can ensure that your rights are fully protected during a credit card dispute. Footnote: sending a physical letter via certified mail is crucial to activating the Fair Credit Billing Act's legal protections. The dangers of relying on the bank's system. Banks are incentivized to make the dispute process as easy as possible, but this often results in you waiving your rights. By calling or using the app to dispute a charge, you're playing by their rules, not the laws. This system benefits the banks, who don't want to deal with the legal responsibilities triggered by proper disputes. If you want to protect your financial rights, it's essential to follow the law to the letter. By doing so, you can hold the bank accountable and potentially secure a $5,000 payout for violations. Footnote: banks prefer consumers to use easy methods to dispute charges, which inadvertently waives your legal rights under the Fair Credit Billing Act. Practical steps for disputing charges. Here are the steps to ensure you're fully protected when disputing a charge under the Fair Credit Billing Act. 1. Send a written dispute within 60 days of receiving the statement. 2. Include charges over $50 in your dispute. 3. Use certified mail to send the dispute letter and keep a copy for your records. 4. If you disagree with the investigation, challenge it within 10 days. 5. If the charge was authorized, you're responsible, but if it wasn't, follow through with your legal protections. By adhering to these steps, you can safeguard your rights and your funds. Footnote: following these steps will ensure that your dispute is handled properly, triggering the protections of the Fair Credit Billing Act.